Welcome, everyone. My name is Marc Bautis. I'm the founder and wealth manager at Bautis Financial, and we're just about to enter the fourth quarter. And with that comes some planning topics that you should probably look at or discuss by the end of the year. So every year I send out a year-end planning checklist, and the purpose is usually twofold. So first, to get people thinking about things that maybe changed in their lives recently, which could necessitate some type of financial planning opportunity. It could be something big, like they're going through a divorce, expecting a baby, changing a job, or moving. And the other reason I send out the checklist, it's a good reminder of things that everyone should think about at least once a year. Things like, am I in the right investment strategy? Especially with the way the markets are going, it's something to think about. Am I taking advantage of all the benefits that are available through my employer? And, is there anything I can do to optimize my tax situation? I know some people look at the checklist, they're not sure how to determine if something applies to them. So we're going to walk through the different areas of the checklist and cover a couple of items from each area that I think will impact people or may impact people and how people should be thinking about them. Obviously, everyone's situation is different and not all these are applicable to everyone. But I'd be happy to sit down with you, go through your own personal situation with you. Okay, so the last couple of years, they've definitely may have brought some unexpected changes to everyone's financial life. Maybe some of you decided to retire or have lost a job or changed jobs or even sold your home within the last year. So even if you haven't made any major life changes, it's important to review your entire financial picture. And the checklist is broken up into different areas to cover that. And it's eight different areas, and we'll discuss each of those individually. Okay, so the first area I want to discuss is taxes. So here are some areas you may want to think about or some things you may want to look at over the next couple of months. The first one is review realized and unrealized gains and losses. So with the way the markets have gone this year, they're mostly down, there may be opportunities to harvest tax losses. This means that you sell an asset that's worth less now than what you purchased it for. And when you do that, you can either offset any capital gains you may have for the year, or you may be able to deduct up to $3,000 of losses on your tax return. If you have more than that, you have the ability to carry forward those to a future tax year, anything above that $3,000. But you have to take action and actually sell the loss. You can't just let it sit there, and that's what's called an unrealized gain. Another thing you want to do is review your potential deductions and credits for 2022 and 2023 and track your donations to charity. Because of the substantial increase in the standard deduction, many taxpayers who have historically itemized deductions may find it advantageous to take the standard deduction in the future. And those who are charitably inclined and find themselves on the margin between taking the standard deduction or itemizing, they may be able to maximize their tax benefits by concentrating their charitable contributions. And you can do that by itemizing their deductions in some years and then taking the increased standard deduction in other years. It's also, like I mentioned, a good time to project out what your income and expenses will be for next year. One of the reasons is because of the high inflation rate, we're finding a lot of people are spending more on their expenses are rising. And you want to just look and see, well, how do I track? Is my income rising as fast as my expenses are, or are there particular areas of my expenses that maybe are rising faster and that we need to address? A lot of people don't start thinking about their taxes until February or March when they start rounding up their documents to send to their CPA. But a lot of tax strategies, you have to actually do something. You have had to have done something by December 31st of that previous year to take advantage of it. So now is a good time to look at some of that. All right, next up is retirement. And retirement, not unexpectedly, comes with a lot of decisions. And whether you're retired or thinking about retirement, there are some things that should be addressed, like, one, you want to make sure you are maxing out any retirement contributions. So if you're working, this might be a 401k and IRA. Even if you're not working, with one of the recent rule changes, you can still, contribute dependent upon your situation, your spouse's situation, what they're doing. You maybe still be able to contribute. Roth conversions are a hot topic now, and they're on sale. And what that means is when a lot of people think about Roth conversions, they think about what their tax bracket they're in now versus the one that they'll be in the future. And then based on which one's higher, that could kind of lean towards making IRA contributions, making Roth contributions, or doing Roth conversions. But no one obviously knows what the tax brackets will be in the future. But one thing that makes Roth conversions appealing now is that IRA values are down since the beginning of the year. So what that means, and I'll give you an example. Let's say you had an IRA worth $100,000 on January 1st of this year. Now, if you're in the 20% tax bracket and you converted it on January 1st, you would owe $20,000 in tax. That's if you converted it to a Roth IRA. However, with the market going down, let's just assume that the IRA is worth $80,000. So if you converted it now, you'd owe $16,000 in tax versus the $20,000 if you did it earlier. Now we're assuming that, it's going to recover and there's going to be growth over time. And if it does, which most likely it will, now you've paid $4,000 less in tax than you would have if you converted it earlier. But also you have to look at, if you don't convert it now, it's going to have that recovery and you're going to pay the tax when you take the money out of the IRA. With conversions, we like to use an approach called filling up the bucket, and that's where you look at how much dollars you have remaining in your current tax bracket, and that's the amount that you would convert into a Roth. And the reason for doing that is it doesn't bump you up. So if you only fill the current bucket that you're in, you wouldn't bump up into a higher tax bracket. And there's some tax brackets where this makes a lot of sense, especially if you're going from 24 to 32 is one of the main ones where this makes sense. So if you're in that bracket, it's definitely something to look at and see if it makes sense for you. Next, investments. So, everyone's really concerned about their investments now with the way the market's going and the news that's coming out there. So you want to look at, what are your investment goals? What is your strategy? Inflation has been really high. Interest rates are up. For years, no one would look at fixed income just because the interest that it was paying was so low. However, with interest rates going up, some of the fixed income has actually become more appealing and you can get a reasonable rate of return on it. Although you do have to consider that with inflation and how does it compare to inflation. Also another thing to consider is, are you rebalancing your portfolio? So that helps with some of what's going on in the market. You can buy lower priced investments. It also one of the benefits of rebalancing is that it ensures that you don't accumulate too much risk for your strategy in your portfolio, nor that you become, on the flip side, too conservative in your portfolio. So it's rebalancing is another thing to consider, and that's whether you do it annually, quarterly, monthly. There's all different, whether it's periodic or whether it's not periodic, and there's something that triggers it. There's all different ways to do it. Insurance is another example of something that you should review once a year and see if you can make any improvements, whether that's on changes to the coverage you have, improving your coverage, or potentially reducing the cost that you pay for your insurance coverage. Insurance is a different area where year to year premiums change, what is covered changes, and you just want to be on top of it and look and see, are there any potential ways to improve? Another thing to look at is, did you reach any milestones this year or within the last year? Some examples of certain milestone ages include 50, where you can now start making catch-up contributions to IRAs and some retirement plans. 59 and a half, where you can take distributions from your IRA or 401k without penalty. 65, that's when you can or should apply for Medicare. So you just want to take a quick look. It should be pretty straightforward. You'll know how old you are. You look and see at the end, just compare it to these milestones and see if any of them apply to you. Healthcare is another important area to review each year. So COVID may have brought changes to your healthcare coverage. Healthcare coverage is changing all the time, even before COVID. So here are some things that you want to look at before the end of the year. For a lot of people, open enrollment is in the fourth quarter. So you want to look at what your benefits are. Are you not taking advantage of anything that you could? You want to make sure that your benefits, that they square away with your money goals. A lot of employers now, they're adding benefits as a retention tool, but also because one of the reasons of the pandemic, health insurance costs are expected to rise over the next couple of years. I see a lot of times where biggest question is whether someone should join their spouse's benefit plan or spouse's health insurance plan, or keep their benefits separate and go on their own. So you really just want to look and kind of compare them as apples to apples, quantitatively as possible. You want to consider whether you want to stay in a low deductible, do you want to pay a low deductible, or maybe go to a high deductible plan that maybe has an HSA. I'm a proponent of HSAs, but they're not right for everyone. It kind of, and we obviously don't know before how often or how much we'll use our health insurance, but you may have an idea. And based on that, what your family structure looks like, you may have an idea of how much you'll use. You may be able to compare it to the previous year. You can make a decision on what's the best way to or what type of coverage is the best for you. There's lots of changes that people are going through. And, I mentioned they can necessitate a planning change or a planning decision that you have to make. And a lot of times you want to make that decision kind of looking at all your different areas of your financial situation. How does that decision impact each area? Not just, I'm going to make this decision in a silo and hopefully it doesn't impact anything else. So, whether you're going through a change or maybe you expect to go through a change the next year, it's a good time to look and plan for it and see, well, how does that change impact everything else that's going on? And these are just some more examples of changes that people go through. Your family's another one where you want to look and see, have you contributed to your education accounts, whether it's for your children or grandchildren. The rules on 529s, what they can be used for, changed. There's also legislation or changes around the student loans and loan forgiveness that you want to consider and look and see, does this impact me? You may also want to front load a 529 where you can get a significant amount of money in a tax advantage account, and you're almost like you're prepaying for your kids' education now and getting it done with. All right, so to wrap up the last chance planning checklist, I offer a free consultation. Like I mentioned, not all these areas are applicable to everyone, but you do want to make sure that you're at least looking at them or at least addressing the ones that are important to you so that nothing slips through the cracks. And you can go to my website, schedule a consultation at Bautis Financial /year-end.